Crypto rallies along with risk assets, but seems to be lagging. Massive expiry this week with 40% of all BTC open interest expiring this Friday. Alts outperform as ETH BTC cross breaks its downtrend. Relative value plays in options set up well as the ETH Bitcoin spread narrows, and skew in ETH swings back towards calls, showing sentiment improving. All this and more in this week's Crypto Insight. Okay, so crypto this week. So crypto, bouncing in line with risk assets, but not quite as, given the volatility levels of crypto, you would have expected to see more. And, we've been flagging this kind of triangle that was forming, and we're like, when that breaks, it's going to fly. That's typically what happens in terms of these technical setups, but it's a bit of a damp squib really, right? It broke up, but it's just chilling there at the 43K level. Now, I'd really like to see a break of this 45,500 level for it to get excited, right? Where we could actually then go back towards 50K, and who knows if we manage to breach that, right? But you could really, this is the big one, I would say. Right? So 43K, it's kind of breaking that now as we speak. It probably does test this 45.5, but it needs to break it to really get some legs, okay? I do think that crypto, is lagging a bit. If you look at the likes of NASDAQ, you look at like inflation break-evens, things that it's been correlated to in the past. It doesn't seem to have moved up quite the same way as they have. Okay, now why that is remains to be seen. We're not seeing, I don't think we're seeing a ton of, we'll talk about the on-chain metrics, right, as to why, but basically, it caught a little bit of a safe haven bid on the Russia stuff, and then maybe there's a bit of an unwind of that. Maybe that's why, or maybe it's just that people would rather go into things that have got more of a story, right? So like you've got Ethereum, coming back into fashion. If we look at the Ethereum Bitcoin spread, I was talking about this downtrend needing to be broken. It got broken. It then retested and held, right? So now this looks to be kind of, on its way up. If it does go back towards the sort of top end of this range, arguably we've got 10% outperformance there, basically, right? So maybe that is sort of attracting the buyers rather than Bitcoin, right, at the moment. And maybe you're getting some selling as people do that relative value trade where they buy Ethereum and sell Bitcoin, and that actually keeps a bit of a lid on Bitcoin. Okay, so I think there's definitely some of that going on, right? Some of the other layer ones are actually killing it as well. Avalanche, or AVAX was up around 30% this week, right? So the other L1s are doing well. Ethereum's up 17%, whereas Bitcoin's up 10, Solana's up 13, and then AVAX is up 32. Basically, they've got a conference, they've got a summit basically in Barcelona this week. So I think that's why they're getting a lot of attention. But these are the kind of things that are driving those other L1s at the moment, basically. Right? So I think people talk about the merge as well, move to proof of stake for Ethereum coming later this year. Again, maybe that's going to attract some buying as people like that and like to buy into the narrative and look for a catalyst. So that's something as well that might be happening there. Another reason why Bitcoin might be capped this week as well is expiry. So if you look at the expiry kind of open interest for March, which is a big expiry, about 40% of all options are expiring this week, right, in Bitcoin. That's huge. And then the big strikes there are 45K and 50K in terms of the calls, right? So, often these can provide a bit of upside resistance. So 45K there is already a bit of a resistance level. Throw into the mix the fact that you've got a big call strike there, we might really struggle to break that this week. So we'll see if we get a rally in crypto, but Bitcoin kind of gets stuck around that 45 area and Ethereum keeps going, you'll kind of know why, basically, right? Because I think that'll have a fair amount to do with it. Yeah. And then, gold's lagging a bit as well, has probably helped crypto. But I think, if you were to see more downside in gold, that would probably be met with a bit of upside in crypto as well, basically, right? So that's there's that underlying negative correlation between the two that I think still does exist from people switching. Yeah. All right, so we mentioned the ETH Bitcoin spread. The other thing to mention on that is the volatility spread. So last week, the volatility spread between ETH and Bitcoin got very tight. So that typically trades kind of 5 and 10 vol points, right? It got pretty close to zero last week. Okay, now I didn't manage to get into it zero. I think the guys at QCP flagged on their report that they managed to get in at those nice levels and maybe even buy some Ethereum vol cheaper, right? But the way I'm looking at it, as you know, people who've kind of been around with me for a while will know I like this trade, is the call switch. So I'm looking at the call switch trade where I buy Ethereum call options and sell Bitcoin call options. I'm keeping them fairly short dated. So I've done some in 8th of April, I've done some in end of April. But the idea is going for a relatively, 15 to 20 delta calls. And the vol differential is you're paying around 5 or 6 vol points, or I was paying around, I don't know if it's moved now, but 5 or 6 vol points I was paying for that spread. And that is a way for me to participate in the idea that ETH Bitcoin breaks higher. And it's, because I think in a rally in crypto, I think that spread can go higher. And then in a sell-off in crypto, those calls will all go out worthless. And I don't think you'll get into too much trouble. So your real risk factor in that trade is if crypto goes higher, but Bitcoin leads, right? Bitcoin. And just in the last week, obviously, we've seen crypto go higher, but the layer ones are leading. Now, that could change, but I think that dynamic is likely to persist for the next sort of few weeks. So I quite like that trade as an expression of that. Without being forced to add a load of crypto beta, it's a way of getting participation. It's a way of trying to extract some alpha, basically, right? That's the idea. Yeah. All right, so that's ETH Bitcoin. We've seen the alts rally on-chain. What we're seeing on-chain. So, looking at the Glassnode stuff this week, I saw Asia has been a pretty dominant seller, right? So, they've got various metrics to track, like where the activity is coming out of in terms of geographies, right? And Asia's been a much more prominent seller than the US and the EU, than Europe. Why that is, I would speculate that, more institutional adoption maybe coming out of the West, right? And also, you've had tighter policy in Asia up till now, right? You've had Asian assets, like Chinese, particularly assets getting crushed, real estate getting crushed, things like that. So maybe there's been less money to want to speculate in crypto, and maybe money that's been in crypto has been coming out because of that, right? So tighter policy up till now than the West, and kind of that institutional adoption that I think is more being driven in the US and things like that. Okay. Chart on the top right, you can see transaction count, right? Number of transactions. Transaction count stable, but not rising. So for you to really get a strong uptick in Bitcoin price, you really want to see, that number going up, right? You want to see those orange bars rising and getting more activity and more transactions going through, right? The network. Longer term holder balances, we see here in the chart on the bottom left, they're pretty high, right? Looking back 2-3 years, they're kind of as high as they've been. They haven't really had a downtick much from those highs. So what does that mean? That means less liquid supply should a rally kick in. So if we do start to get a beta chase in crypto, long-term holders are sitting there hodling. If short-term people want to step in and chase it, there's arguably less supply, and the market's going to be a bit thinner. So that means arguably we could get a decent move, but you kind of need that. You need that momentum to kick in. You need that break of 46 and then a break of 50. And then we can start talking about that long-term supply really having an impact, right? Because you're sucking in those short-term buyers, and the long-term buyers don't want to sell it to them, basically, right? That's how that works. Yet to see that, basically. And then finally, the bottom right chart is you look at futures annualized rolling basis on a 3-month. It's kind of at the lows, basically, right? Going back to 2020, right? So when the futures basis is low, it suggests people are well hedged. People are either selling futures against their long Bitcoin, or they're buying risk reversals, or whatever they're doing. They're supplying some of that 3-month derivative exposure to the street, and that compresses that spread, okay? Which is pretty different to like what it's like in a proper crypto bull market, where those spreads are arguably 10, even 20% on an annualized basis. So what does that say? That says maybe longer dated calls are actually quite attractive, right? If you're bullish longer term, those longer dated calls are being priced on quite a low futures basis, right? So if we go back into a bull market type world in crypto, that futures basis can widen back out. And if you own those longer dated calls, you're going to benefit from not only the delta, just spot going higher, but also the forward basis widening out as well, right? So that's what that says to me. Yeah. If we then look at realized volatility, look here, this is the realized vol chart, yeah? So realized vol has kind of been dragging implied vol down, right? Realized vol was already kind of stabilizing in crypto. Obviously, we were like chopping around before FOMC, but implieds were holding, right? So you saw that spread was widening to over 10 vol points, okay? Now, post FOMC, we obviously had the move down in implieds, but look at what's happened to realized. It's gone onto a 40 handle. And if you look at the volatility cone on the right, that's pretty much the lows that you've had over the last year in terms of realized on super short dated metrics from 1 to 2 weeks, okay? So realized vol pretty much as low as it gets in Bitcoin, dragging down implieds, but look at implieds now. They're kind of flatlining over the last few days. So you've actually got quite a large premium again between implied and realized in the front end of Bitcoin, about 20 vols again, because the realized is so damn low. Now, I suspect the realize is probably going to now be the one that closes the gap and probably have a bit of a bounce. So if we can break to the upside, we could arguably have a 5% plus up day, and then that realize kind of bounces and comes more in line with the implied. So I think that implied premium, even though we don't have necessarily an event, a flagged, well-known event, the market's kind of starting to chase the idea that we could break. And that's why you're seeing some of that front end catch a bid. And I think, you know, if we don't get the break, that implies going to come crashing back down next week, about 10 vols probably. If we do get the break, then you'll see the realized catch up. And I suspect that's probably what we're going to see, right? Because we don't often see realized just sit at 45 for very long in crypto, right? Okay, so that's what I'm seeing on realized. If we then take a look at the term structure. Okay, so the term structure, no surprise, we went from inverted back to contango. See that front end collapsing by 10 vols plus. Like I say, in the last day or two, that front end has caught a little bit of a bid as people get excited about potential break, but that's kind of where we are. The chart on the right shows it in another way, right? So you can see I've circled the backwardation ahead of the FOMC event, where you had the pink line miles above in the near 90 level, and then the longer dated stuff was lower. So that's an inverted curve. And then you see post FOMC, the front really collapses and goes below the long end, and you see that contango where the pink and the blue, which are the shorter dated maturities, trade lower. So you can see that flip from inverted or backwardated curve to a contango curve. And then literally in the last day or so, you've had that front end pop again to keep the curve quite flat again, basically, right? But that's how that curve's been moving around. It's been moving around in line with what you would normally expect post an event, right? And also what really exacerbated that type of move in the front end is the likes of the DOV selling, and the fact that the realized just didn't really have much of a move. So people who are long gamma were quick to dump it, basically, because it wasn't paying them, yeah, to keep that gamma. You know, if we then look at skew, so you can see here the skew. So, you know, I'd flagged last week that Ethereum skew was quite a bit steeper than Bitcoin, as people were using the downside of Ethereum as their kind of protection trade, because they thought that would have a higher beta to the downside because it wouldn't have any kind of digital gold properties or whatever. That's completely reversed, right? So you've had skews in all of them kind of move back towards neutral. But the move from where Ethereum skew was to neutral is a much bigger move, right? So people have kind of just dumped those puts, lost that kind of idea that Ethereum is going to give us the protection to the downside. And actually now it's a much more symmetrical, much more neutral skew across the board, basically, right? So that's quite a big sentiment shift in Ethereum. And also that coincides with Ethereum breaking its downtrend. So for me, that's quite a bullish shift that I'm seeing in Ethereum skew, which kind of leads me to believe that it might have some legs, which is why I quite like those cool switches that I've been basically doing. Okay. And then obviously last but not least, flows, right? What are the dominant flows that we've seen? And we've seen basically a massive put spread sale on Bitcoin, 34K, 30K put spread. That was before the FOMC. So that was a way for whoever did that, and it was a vol player most likely, was selling vol in the front end of the curve, but not selling outright vol, having some tail risk protection in case the market melted down. So you're still earning premium, You're still selling front-end vol, but you're owning a bit of skew against it. The skew in Bitcoin wasn't ridiculously elevated, so that protection wasn't, you weren't paying the earth for that. So that kind of works and makes sense. And that trade did end up doing pretty well. Kind of, yeah, because the spot didn't really rally and the vols kind of collapsed. So that put spread would have evaporated in price. So it would have been a good sale. In terms of buying flow, seeing call buyers in April maturities, end of April and beginning of April, around the 42K and the 50K strikes. So that's kind of what we're seeing in Bitcoin. In terms of Ethereum, those 30 calls, the 3,000 calls that got bought got dumped pretty quickly. There was a big purchase the week before that they got dumped onto the street in favor of longer dated calls, you know, December, September, June, all of them kind of getting bought. And then whilst the vol did come down, we did see a fair amount of put buying come in April in 2,600 to 1,800 strikes. So still some protection buying, taking advantage of the collapse in vol and skew, but a bit more mixed the picture on Ethereum, basically. Yeah. And then the last thing I will note is what's been happening with the DOVs, right? So DOVs obviously still supplying gamma to the street every week. You know, that flow's not going anywhere. They're continuing to perform well. They're innovating, they're increasing their offerings. This is a snapshot of Friction. Probably their best performing vol is the Solana one, covered call selling. So it's quite nice, this analytics page that they show you, right? So you can see the vols that you can invest in and stuff and the returns that they're talking about 37.4% API. So just projecting how much premium they think you can harvest over the course of a year by doing this every week. But the Solana one's performing really well, right? It's up around 6% or whatever in a matter of couple of months. And it's because if you look here, you've got the Solana price in this chart, and then you've got these dotted lines that show you the call strikes that they've sold. And in Solana, it's just never managed to breach any of those call strikes, right? So you stuck your Solana in a vault and you sold calls, you've never gone above the call strike that you sold, because that vol's been trading at around 100 basically, right? So that's worked really well at harvesting that call premium. You know, those analytic pages are good because you can see how each of the epochs has done, right? And, you know, I think it's quite informative. There's about $20 million locked up into that in that particular vault, but overall the whole platform Friction has got about 100 million, 120 or something like that. Ribbon's got similar sort of numbers. Ribbon's biggest vault seems to be an Ethereum cash covered put sale, where they're selling downside puts every week. And if you look here, this is a Bitcoin Friction one where they sold puts. And this one's done pretty well as well, right? So you can see Bitcoin, there's a price action in Bitcoin and the strike that they've sold to the downside, and they've kind of never really been breached in any meaningful way. So they've got to keep that put premium that they're selling basically, right? So I just wanted to flag that for those interested in the DOVs. Check out Friction, check out their pages. And watch out for, I am going to drop a video about this and go over these DOVs in more detail, what they're doing, how it works, things like that. But I just wanted to kind of, you know, briefly mention it for people who are interested. And that's pretty much it from me. Thanks for watching, guys. If you like this content, please subscribe to our channel, give the video a thumbs up, and hit the notification bell so you don't miss out on future videos. To watch the entire macro call, which includes the live Q&A and a walkthrough of all my top trades, you can sign up for a free trial to Macro Insight. If you join our exclusive trading community, you'll get access to our Telegram group, and you'll also get weekly market reports summarizing the macro call. The link is in the description to the video. And for more information, you can connect with us on socials, or you can visit our website, options-insight.com. Thanks a lot.